Welcome to the Thursday edition of the Tech Stocks Daily Podcast. Today we're diving into Evertec's impressive financial footwork as they dazzle value investors with low PE magic and a strong Zacks rank of number 2. Meanwhile, Apple is flexing its financial muscles, showing off robust ROE and killer services growth, despite lukewarm revenue numbers. We'll also chat about Verizon's push for digital wellness, challenging gadget lovers to balance online and offline worlds, hosted by none other than Drew Barrymore. And don't miss out on AvidXchange stealing headlines with their upcoming cameo at the Wolfe FinTech Forum. Excited? Let's dive into the details and make those tech stocks shine. Evertec has been buzzing in the financial world today as it takes the spotlight in discussions about value stocks on NASDAQ. This Puerto Rican-based company, which provides a full suite of financial transaction services across Latin America and the Caribbean, is being lauded for its impressive value proposition. But what's making EVTC so appealing to experts, and why is it a topic of currency in finance discussions today? Let's dive into the digits and details. When we talk about value stocks, we're looking at companies that appear undervalued according to a collection of comprehensive financial metrics. Evertec fits snugly into this category, catching the eye of investors who are trained in reading between the lines of price tag numbers and actual values. Both of today's financial updates emphasized Evertec's favorable standing, mainly due to its commendable performance and valuation metrics under the rigorous Zacks rank and style scores system. Currently holding a Zacks rank of number 2, Evertec boasts a stellar grade in the value category, reflecting its good earnings outlook and solid valuation metrics that have caught the attention of keen-eyed value investors. Evertec's attractiveness sprouts from its PE ratio of 11.12, considerably lower than its industry average, showcasing its potential as a bargain among its peers. In a financial world where supermodels are often rated by PG ratio, Evertec charms with a PE of 1.77, outshining its industry neighbors. These numbers aren't just idle figures, they're indicators of its potential growth and value presence. With a PB ratio of 4.98, a stark contrast to the industry rhythm, EVTC also stands out like a maestro conducting an economical symphony. These key metrics are like unlocking a value investor's treasure trove, heralding that amidst today's sometimes overpriced market, there is gold dust in the hands of an Evertec shareholder. Moreover, its PCF ratio of 9.54 is yet another gem, spotlighting the cash-friendly nature of EVTC. It comfortably enriches pockets in a market environment where the industry's average number generally tips the scales at a higher, less flattering level. By coupling these rich stats with a robust earnings outlook and steady performance, EVTC emerges as an irresistible entity for value-oriented investors. As financial transaction services grow increasingly vital, Evertec's regional stronghold and strategic market positioning ensure it remains both a valuable and underestimated option. So to wrap it up, amidst today's sigh-inducing market prices and occasional overvaluations, Evertec distinguishes itself, not with fireworks, but with a quiet firepower. It offers a promising play for those investors grounded in value investing principles, advocating potential profitability grounded in statistical prudence. Who knew such financial rhythm was hiding right under our noses in the heart of financial transaction jazz? Keep your eyes and calculators on this one. It might just strike the right chord in your investment symphony. Apple, a titan of tech that's rarely out of the news for long. Today, Apple was making waves due to an industry comparison that put it in the spotlight alongside its fierce competitors in the technology, hardware, storage, and peripherals industry. This comparison isn't just a bland head-to-head, it dove deep into the gritty details of financial metrics and market positions. Think of it like an extended data-packed episode of your favorite tech drama. First up, we're looking at Apple's financial ratios. With a price-to-earnings ratio of 37.42, Apple flashed a signal of potential undervaluation compared to the industry average. It's like buying a yacht for the price of a speedboat. Yet, don't be too quick to throw a deck party. Apple's price-to-book and price-to-sales ratios were sky-high, suggesting a little overvaluation might be lurking when you peek under the hood. But here's where it gets juicier. Apple's return on equity of 58.74% way surpassed the industry standard, flexing some serious financial muscle that screams profitability. It's the financial equivalent of having a Swiss Army knife for revenue generation, effective and always leaves you prepared. When it comes to the nuts and bolts of financial health, Apple's debt-to-equity ratio sat comfortably in the middle compared to its top 4 arch rivals. It's like being the Goldilocks of tech giants. Not too risky, not too conservative, just right. This balanced funding buffet hints at a strong, sustainable mix of debt and equity, a sweet spot that investors prefer. On a slightly sour note, Apple's revenue growth of 3.95% paled next to the industry average of 22.95%. It seems Apple's revenue engine could do with a few more RPMs. Though this doesn't fuel a panic, it does highlight where they might work on generating some speed. But hold on to your Apple Watches because the services segment is a glowing megastar in Apple's constellation. Subscription-based streams like the App Store, Apple Music, and iCloud witnessed substantial growth. This sector saw a hearty hike from $78.1 billion in 2022 to $96.2 billion in 2024. With high gross margins, Apple proves it can do soft power, the kind that lines pockets. Finally, Apple's connection to subscription kings Netflix and Sony showed how its iOS ecosystem is more than just a pretty interface. It's also mean profit traction. These associations enrich Apple's offering and customer engagement, turning iPhones into gateways for digital delight. And what's not to like about that? In short, Apple's spotlight moment in the news today is about how it's maintaining, or even expanding its stronghold. By mixing insightful financial optics and broad ecosystem expansion, Apple stays as relevant as ever. Whether you're Team AAPL or just an eager observer, Apple's narrative today gives investors plenty of food for thought. All right, tech aficionados, let's dive into today's buzzworthy news from Verizon Communications. Now, whether you're the kind of person who's glued to every gadget or someone who's counting down the days to the global day of unplugging like it's the next big holiday, Verizon's got a little something for everyone. Verizon is calling for a digital holiday, asking everyone to brace yourself, put the phone down. Yes, you heard that right. In anticipation of the global day of unplugging, they're rolling out new plans to guide families toward better digital wellness. Hosted by none other than Drew Barrymore, the Verizon Digital Wellness Summit planted the seeds for these ambitious initiatives, all about promoting screen time balance and digital well-being in families. And honestly, who doesn't need a technology timeout every once in a while? But wait, this isn't just about telling folks to chuck their devices into the nearest river. It's way more thought out. With an average household sporting a brag-worthy collection of 18 gadgets officially making it a connected device zoo, Verizon understands the double-edged sword of our online lives. CEO Sampath from Verizon Consumer Gear shifted into motivational speaker mode, emphasizing the importance of digital safety and balanced tech habits. Basically, let's not continue raising a generation that believes eye strain is part of their personality, shall we? So, what's the plan, Stan? Verizon's throwing together alliances with big names like Discovery Education, O8s from ARP, My Digital Tattoo, and even the beloved puppets at Sesame Workshop. It's a multi-generational digital extravaganza with immersive NYC pop-ups designed to bring offline interactions back into vogue. Yes, the outside world is kind of cool too. Verizon doesn't just want to dish out smartphones like candy. They want to put tech's powers into everyone's hands while ensuring users wield those powers responsibly. Enter Donna Epps, Verizon's Chief Responsible Business Officer, who revealed digital programs her team will be launching. They're geared up to bolster everyone's knowledge and skills on how to navigate the digital battlefield without losing your essence to meme scrolls and cat gifs. And if your significant aha moment from all this is that technology should enhance, not invade our lives, that's the sort of stuff Verizon's all about nowadays. They're innovating to help you work, live, and maybe, just maybe, occasionally unplug while in a gaming chair. With a business empire sprawling across countries and playing galactic chess with nearly all Fortune 500 companies, Verizon logged massive revenues of $134 billion in 2023. But it's not resting on its laurels. They're constantly adapting to meet today's needs with an eye on tomorrow, be it the demands of mobility or a beacon of reliable, secure connectivity. This headline-making move toward digital wellness, cow-written with modern family needs, serves like a friendly nudge from Verizon, urging us all to set aside the technological leash every once in a while and feel the grass between our toes. After all, balance is key, right? In a hyper-connected world, sometimes a little disconnection is just what the screen doctor ordered. All right, tech enthusiasts, let's dive into why AvidXchange, rock stars of the accounts payable world, were making waves in the news today. Picture this. AvidXchange, provider of top-tier accounts payable automation software and payment solutions, is gearing up for an exclusive appearance at one of the industry's marquee events, the Wolfe FinTech Forum 2025 in the bustling heart of New York City. Mark your calendars for March 12th at the crack of dawn, 8:10 a.m. ET, when the AvidXchange team takes the virtual stage. Now that's how you get a morning caffeine hit without the espresso. For those of you wondering, AvidXchange is like the Elon Musk of invoices. Everybody talks about it, and almost everyone wants a ride on their innovative payment spaceship. They're well respected in automating AP workflows for more than 8,500 businesses and paying out to over a whopping 1,350,000 suppliers. Imagine digitizing all those cumbersome forms and invoices to make seamless payments. Hello, efficiency. Goodbye, stacks of paperwork. This shift dramatically reduces manual overload and increases productivity within companies. And who doesn't love a little more efficiency in their life? But the best part? This hootenanny will be live streamed right from their investor relations website. It's like pay-per-view for fintech enthusiasts, minus the hefty boxing ticket price. And yes, for those of us who love to binge-watch their favorite fintech expos, a replay will be available, limited time only, so catch it while it's fresh. AvidXchange's tech aims to transform how businesses handle what many consider the bane of their existence, paying bills. They've been steadily cruising in their payments rocket, and joining them on their flight in such distinguished events allows stakeholders, like you and me, to get a flavor of their vision and strategies. Engaging with the broader financial technology community is key for keeping up those sweet innovation juices. Now, here's the burning question of the hour. What do you think about all this buzz around AvidXchange and their cutting-edge services? Are you excited about their participation in the Wolfe FinTech Forum, and do you plan to tune into the webcast? I want to hear your thoughts. Do you reckon that AvidXchange is setting a paragon for how future AP automation should roll out? Or perhaps you're already using their services and can share some insider tips. Drop your ponderings in the comments below, and let's get those dialogue engines humming. Remember, it's your thoughts and insights that keep this tech-savvy community thriving. So don't hesitate, let those ideas shake up our feed. After all, in the world of tech, engagement is the new information gold. All right, tech investors, let's zoom in on Evertec today. So here's the scoop. Evertec is drawing a lot of attention for being a juicy value stock, with financial metrics that make some investors' calculators do a happy dance. The company is sparkling in the eyes of value investors due to its low PE ratio and a value-carrying PEG ratio, alongside standing tall with a ZAX rank of 2, indicating strong forward momentum. Descriptors like favorable performance and solid valuation metrics aren't just platitudes, they're the financial fairy dust frosted over Evertec's current standing. Would I buy Evertec, based on today's reporting? Let's break it down like your favorite catchy song. We're talking about a company with good legs to sprint in the undervalued space, promising prospects courtesy of a solid earnings outlook and indicators of robustness backed by those sparkly valuation numbers. For anyone keen on value investing, rethinking portfolios to blend promising growth and stability, Evertec sounds like cash register music. Compared to its industry, Evertec is like that dessert pie in the oven you can smell from the living room. It invites a closer inspection, and the initial taste doesn't disappoint. The favorable stats indicate there's a good storyline here for someone wanting to toss their chips in the value investment pot. However, before you go full treasure hunter on EVTC, remember, the prudent investor's motto is do your own research. Check your financial priorities, risk tolerance, and consider speaking with a financial advisor before making any moves. Though today's indicators shine bright, stocks carry inherent risks that make double-checking your path all the more essential. Hold, buy, or sell. What's your play? My bias leans towards a buy because its value-centric charms could pay off in your investment tapestry, but feel free to take that where it best propels your own financial journey. So folks, as your compadres in this tech investing odyssey, let's stay sharp and thrive together. To wrap up today's market activity, we've seen Evertec basking in the limelight as a prime value stock, casting a spell over savvy investors with its compelling financial metrics and undervalued charm. Apple, ever the titan, showcased its robust ecosystem and profitability prowess amidst competitors, even as it keeps stretching its wings in the services segment. Verizon made waves with its push for digital wellness, aiming to balance our tech-obsessed lifestyles with some much-needed unplugging. And AvidXchange stole a portion of the spotlight with its upcoming FinTech Forum appearance, ready to dazzle with its innovative payment solutions. If today's deep dive into tech left you wanting more, remember to like, subscribe, and share the love with fellow tech buffs. Don't miss out. Come back tomorrow for another dose of tech news magic.